Hey everybody, and welcome back to another video. This is How to Invest, Spencer here, and this one is going to be on Plug Power stock. Today, the stock moved up over almost 1.5%, almost to $25, even though that the indices were almost all red, other than a fractional gain in the NASDAQ. As we usually like to state first, the market capitalization is $14.3 billion, which is quite rich if we look at some of the stats for the stock, considering that they are pre-revenue and pre-earnings. You can see in their last quarter they had negative $5 million in revenue, and then their profit was obviously even worse if they're not making any revenue, at negative 433 million. But they do have quite a good balance sheet for the amount of money that they're losing per quarter. That they have over $4.5 billion on their balance sheet, and that is more than enough to pay down all of their $705 million of debt. You can see here the ratio is pretty good, and then honestly just a really good amount of cash for the market capitalization that they have on hand. I think this is necessary considering this company is looking to expand. We can see here articles have come out, which is kind of why I believe that the stock has gone green in the past couple days, even though we have had some overall selling pressures in the market, is that they are planning to expand into Europe. And if we look further down, they have their sights set on Germany as their headquarters, which is kind of like central to a lot of Europe, where they'd be able to easily access Western and Eastern Europe and really try to maximize their profits there. I wanted to also take a look at a quick article regarding on why some of the revenue is as low as it is during the recent quarter. So this was posted in July by Reka, and she writes that investors have been on a roller coaster ride this year. The stock price fell to a low price of around $20 in May, from a high of 73 in January. We'll get into the technical analysis later, and you can see that the 73 number was really all euphoria and was really not based on any of the fundamentals of the company. It was a lot of just retail investors and a short squeeze, in fact. And then she also goes on to say, at $33, the stock is still 54% off from its highs. So the stock actually has fallen even further from 33 down to 25 currently, and was at a lows recently of around 18. And she goes on to say, the company reported strong revenue growth in the first quarter and has also recently partnered with Renault, SK Group, and Aconia, which are all fuel cell hydrogen plays. And then she says, let's see if Plug Power's growth and fall in stock price this year make it a buy right now. So I would say at that point, no. I didn't think that it was a buy. It wasn't really too much on my radar. She goes, stock revenue growth. Plug Power's revenue growth to $72 million in the first quarter, up 76% over a year ago, and an increase of sales to Gen drive units, which are largely used to power forklifts, which is a lot of their profitability currently, drove revenue growth. As the graph shown above, the Plug Power's revenue has significantly risen over the years, and the company reported negative revenue in the fourth quarter of 2020 due to the effect of certain warrants. So this is just due to stock that they had to issue onto the public market, and this is like an oddity and a very peculiar event that really messed up their earnings that we saw over there on the negative revenue. So we can see here, just in the first quarter, they earned $72 million, which is quite a lot, and then negative, which obviously is much worse than $72 million. So that kind of gives an example of really how these numbers can be misleading, because they don't give a full picture of previous earnings reports. It just goes year over year. But the article goes on to say that they have strategic partnerships to fuel growth. I like the little pun there. But Plug Power has entered new partnerships this year that could further fuel revenue growth. It partnered with French automaker Renault to launch a 50-50 joint venture, which will target 30% of Europe's fuel cell powers light commercial vehicle. Plug Powers expects 500,000 fuel cell vehicles used in Europe by 2030. And they go on to say that this is unrealistic, considering there's only 35,000 in use in the end of 2020. And then it says, what's more, Korea and the US, China, and Japan together have 92% of these vehicles. So Europe just really isn't realistically hitting those numbers, but it's still a very, very bullish target to hit. Even if they hit half of that, that would be very, very bullish. Plug Power has also partnered with Korea's SK Group, which has invested $1.6 billion into Plug Power. This is not insignificant. This is a good amount of their market capitalization currently. 1.6. I just wanted to point that out. That's a very, very big investment into this company, and can fuel a lot of the growth into the future if this is successful. South Korea leads in advancing FCEVs and accounted for 29% of them at the end of 2020, which is crazy to consider just their population considered to the rest of the world. The Korean government aims for 6 million hydrogen FCEVs on the road by 2040, which is a lot. And then Plug Power will provide fuel celling infrastructure and electrolyzers through its partnership with the SK Group. This collaboration thus could provide significant growth opportunities for Plug Power. It says Plug Power's other recent partnerships with Econia is a company focused on green hydrogen. The companies jointly plan to target 20% of share of green hydrogen business in Spain and Portugal by 2030, with an investment of 2 billion euros, which is probably closer to $2.5 billion. These partnerships are crucial as they provide potential growth opportunities to the Plug Power outside of its core material handling business, where it largely supplies fuel cells to forklifts. The material handling business hasn't been a profitable company for years. Focusing on green hydrogen. In addition to its partnership with Econia, Econia, Plug Power is working to build a green hydrogen generation network in the U.S. It has announced construction of 3 green hydrogen plants in the country. Plug Power's targets to have a capacity of 500 tons per day by 2025 and 1,000 tons per day by 2028, which are quite lofty goals, which you can't tell is a theme of this company. Challenging road ahead for Plug Power. All of the above developments are surely positive for Plug Power. However, the new sentiment will prove to be, whether the new sentiments will prove to be profitable for Plug Power remains to be seen or not. The company expects to generate gross margin of 30% by 2024. I think this is rich. I think that they're still very, very early on in trying to position themselves throughout the world and build out the infrastructure that they need to become profitable. So I think it would be closer to 2025 where they would be starting to really exceed their margin. But that's just my opinion. However, this isn't clear how Plug Power will achieve that target now. Right now, there are lots of uncertainties surrounding the company's profit potential and the newer segment that is targeting. With the availability of cheaper traditional energy and storage options, fuel cells will still find limited demand, though increased focus on cleaner energy sources may change that. Plug Power's pricing will likely continue to be limited. In the transport segment, a faster adoption of battery electric vehicles may limit the growth of FCEVs. Plug Power is trading at a forward price of sales to ratio of 40, which is extremely high. Even a 4 is very high, which is what Tesla's at currently is a 4, and that's considered extremely high, which looks too high considering the above risk. For that reason, despite a strong revenue growth, the stock isn't an enticing buy right now. So I just wanted to point out quickly the pricing of green hydrogen at a cost of $6 per kilogram. green hydrogen is the most expensive form of hydrogen. That's very expensive, and it says 2 or 3 times more expensive than blue hydrogen. And then it goes, you can look further into blue versus green hydrogen if you guys would like. But they're really counting on the fact that green hydrogen and the cost of producing green hydrogen will go down over time, which has yet to be seen on a mass scale production. There's an article here saying that they will fall to about $3 per kilogram, but we will see about that. If we look at some of the technical analysis on the stock, I have kind of a channel. Here we go. I drew 2 lines for a channel that I was envisioning when I saw the stock. So this starts back at the March peak, where it was accentuating an upturn right before COVID kind of hit off. And then here is kind of at the trough of their downturn in March. And then I drew a channel just based off of their just kind of acceleration and positioning and extrapolated it. And we can see here that it falls, or the stock falls a great amount in this channel and really only breaks through it through a lot of the euphoria that I was mentioning earlier when it hit up to 73. So once it broke through the box right here in December 2nd, it took only 2 months to go up to 73 from 24. So that's almost a 3x in 2 months, which is phenomenal for any stock or anything in the market for returns. But then it came back down into the box. We can see here down on, I think it was 511, we had a huge sell-off. This was kind of a flash crash that we had in the overall market. Just to prove that, I came over to Jumia. I remember this day fell very far too. You can see here 511 again, had a very rough day just for a couple minutes, honestly. And then there was an immense amount of buying pressure. I wasn't lucky enough to buy either of them, but I noticed, I was like, wow, what is going on? Are we having a stock market crash? But I didn't really have too much time to check. But I didn't buy either of these stocks just because at that point I wasn't too enticed by either of them. And then we had a very clean bounce off of this kind of channel that I drew. As we can see here back, we did have a couple bounces off of it and then almost bounces off of it, but hit the moving averages. And even off of the bounce, we had a clean bounce off of the top once, right at 33. And we had a slow downtrend, and then we tried to go into an uptrend. We can see here, looks like we broke the resistance here at about $33, and it went up to 34, almost 35. And then since then, it looks like the beginning of July, we've been in a downtrend. Recently, though, we have had a clean bounce off of the channel again, right on September 13th, and we have actually a very clean double bottom from the 13th and the 20th of August. They're both right around the same price at the close, and that just makes a very bullish technical analysis. Anytime you can see a double bottom, it provides very good support that the stock won't fall below this, because at this price people are buying up the stock because they find that at an attractive price at this point in time. Since then, we have had 3 green days in a row after that, and these have all been in red days, like I said earlier, and we are starting to break through some of the moving averages that we have been falling through on the way down. So we just broke through the 5-day, and we're approaching the 10-day and the 25, and the 50 is really the only one that I'm really looking at, because from this, you can see the 200 is way up here, but a lot of that is averaging in a lot of the 73, which was all euphoria, and I don't really see as like factual data. It was more just outliers. So I'm really taking into account the 50-day moving average, because that accounts for more recent and more accurate data. So once it breaks through the 50-day moving average, we could see a very, very good uptrend. And even from here, if we look, we're currently at just about $25. If we get a bounce to the top of the box, that's around, if we go out to even just the start of 2022, we could hit $45 just in 3 months. So that would be a very, very good return if you are a trader. But I don't know if I am looking to get into this stock just because some of the points listed in the article here by, I think it was Rekka, she said that mainly that they have very, very limited demand for their product currently, and they have, secondly, not a lot of pricing power, which highly affects their operating margin and how much money they're making from their business. And then thirdly, they really just don't have a good amount of supply currently either. And then lastly, I forgot, there's just a lot of competition, not only for green hydrogen, but cleaner energy in general, like she said, whether that be batteries or something else. But a very, very reasonable opportunity would be solid state batteries. As another company, QuantumScape, that I've done a couple videos on, they are looking to kind of disrupt the battery space. And if a company like that were to do that, they could expand further from cars and even into forklifts and other vehicles. So it may make this company obsolete. So there are inherent risks with this company, as there are for all stocks. But the technical analysis looks pretty clean right now from a trading analysis if you want to make a decent return. But just keep aware, if we do break below this channel or fall below the double bottom, we could have a very, very rough period. Almost looks like a triple bottom back here. Oh, no, that was the one earlier. All right, if you made it this far, thank you very much for watching and have a great day.